Good afternoon, everyone. It's David Paul speaking. It's 6:30 UK time, and I'm looking at the US market, and we've got a lot of green on the front page of VectorVest USA. There are 2,318 shares on the buy recommendation and 10,043 on the sell. The short-term trend is up, the long-term trend is up. And that long-term trend has been confirmed by price action, and we had the longest term measure of the trend turn up on January the 18th. So everything looking good, and the advice is VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. And clearly we should have been looking at this strongly from about the 18th and 19th of January, but there's three stocks that look very promising, and I have them in my viewers section here. Paycom, Adobe, and MasterCard. Now, on VectorVest, they're all well up today, but on VectorVest they have a relative value which measures the price appreciation potential in relation to what a AAA rated corporate bond will pay over the next 3 years. And anything above 1.3 is excellent, so we can see that these shares have got RVs of 1.37, 1.41, 1.33. So those are excellent measures. The safety and the predictability of the earnings of MasterCard and Adobe are excellent, and on Paycom Software, good. They're all rising. They have a comfort index which measures the long-term trend of greater than 1. They're all in buy recommendations, and very importantly, for my style of investing, VectorVest forecasts that they're all going to grow earnings well above 20% next year. But when we get to the charts, that's when it really gets interesting, because I've loaded a 3-year chart, and it's a weekly chart, and as you can see, Paycom, which has got the highest combination of value, safety, and trend, that's why it comes to the top of the list, pulled back quite predictably to this long-term trend line. Earnings per share is growing strongly, and if we put in a horizontal line, we can see that it pulled back to this old top. So what I had here is something that I always look for, which is this confluence of support between a trend line, old high, in other words resistance becoming support, one of the oldest tenets of technical analysis. And then of course I always look at my old friend Fibonacci, and I look at the last major range, which was from there, if I can get it, up to there. And we can see that there was another confluence, because that 78% retracement, the square root of 618, very, very, very important, came in exactly there as well. Now the share's pushing up the page. It's on a buy recommendation, and folks, this range can easily be done again. So that would take this up to about 180 from here. So that looks as if it can be a nice paying swing trade, and I think to the top of this channel. So if you draw a parallel line here, I think that's where that can get to. Adobe is interesting. Adobe, there's the long-term trend line. Much more difficult to see an old high here, but we have got Fib coming in about the same level as well. If we take it from there, that is a 618 retracement, and if we were to take it to this previous low, that's in fact a 786 retracement. So when you're not quite sure which bottom to actually start the Fib from, then just do 2 or 3 of them where they sit on top of each other is a good place. And if we do go back here, we can see that that's a 50% retracement. That technique was made famous by a chap called Joe DiNapoli when he wrote a book called The Napoli Levels, which are confluences of Fibs. Now this share is pushing up quite strongly through this resistance area here, defined by that simple trend line, and it's on a buy recommendation in VectorVest, and I think that this can push up the page strongly, assuming the general market keeps going. The last candidate is MasterCard, and again MasterCard pulled back in this quite orderly flag type formation. one of my favorite patterns, in fact. So it pulled back right to that low. There's the long-term trend line. Again, I think you know what I'm going to do now. It's not rocket science, but it works. From that low to that, and that's exactly 618 to those lows. And we could certainly go back further. That turns out to be about 50%, but I think that's the obvious place to do it from that low. That's about 50% retracement. Now, on these charts, we can put a measure of momentum up as well. And the momentum indicator I'm going to use is a weekly MACD. An indicator made famous by Jerry Appel some 20 or 30 years ago. This is a weekly MACD. It's a very strong momentum indicator, and we can see that we have a very strong reverse divergence or compound divergence, because the price is making a rising bottom, but the MACD is making a falling bottom and has just crossed. So in this period here, while this was rising, this has fallen, and now it's moving up the page, and that's what technical analysts guys refer to as a slingshot. And this can be repeated, and I think the first target, of course, would be that channel top. But this share over the last 3 years has grown. This is a Dow stock that has grown earnings from less than $4 to $7.50, and that's a lot. If we come to the next, as you can see, Adobe, again, this brute of a reverse divergence, folks. From there, price has been rising, this is falling, and it's just crossed over here. And I think that if we get a close above this little trend line, this will motor. Again, MasterCard here showing, oh, the wrong way, David. The MasterCard in Paycom software, the same reverse divergence we can see from there. Paycom software is going a little bit, and I think that your stop loss would need to be probably down around that trend line, because as soon as you buy it, it could easily come back on you. So those are three candidates, but more than the candidates, I wanted to try and get across how to actually go about finding high probability, low risk trades. And how to actually put together the three things that have made VectorVest great. One is the fundamental position of a share. Two is the technical position of the share. And three is the technical position of the overall market. And as I, in fact, speak, all three are favorable. 70% of the exercise, folks, is the overall market, and the overall market is summarized on the front page of VectorVest every day. As we, in fact, go through this trading day, the short-term trend is up, the long-term trend is up, and the long-term trend or the underlying trend has been confirmed by price action. Anything else is an ego-based prophecy. Those are facts. I hope you found that useful. Thank you very much. Bye-bye now.